Hey guys, welcome to Our Financial Future. This is a channel designed to build a community of investors so we can all achieve our financial freedom. In this video, I'm going to go over stock market terminologies. So stock market terminology is essentially learning the language of the finance world. And these are things that you're going to have to know because there's going to be people out there having conversations and you want to be able to understand it. You could overhear someone's conversation that could be very important for you for your investing practice and not understand it. So we're going to go through some terminologies and I will try to make this as quick as possible so you can learn as quick as possible so we can get you on the road to learning how to invest. Let's get into this.
Online brokerage account. A broker is a person that buys and sells stocks for you. You register an online account to access their services. Ticker symbol. Each stock has a ticker symbol and it's how we search for them in Google or stock market apps like Yahoo Finance. Portfolio. This is where you keep your stocks in cash and each stock represents a percentage of your portfolio. Press release. When a company has news, it releases an article. Public company. This is simply a company that issues stocks to the public. A private company doesn't issue stocks to the public. You'll hear things like going long and going short. This means you are investing in the long term. If you are going short, then this means you are betting the company will go down. A bull and bear market. Bull market is when prices are rising or expected to rise, and a bear market is the opposite as they have fallen. An individual investor. They are also known as retail investors, and they are people like you and me who buy through a broker. A day trader. This is someone, instead of buying and holding for the long term, buys and sells within the hour or a couple of hours. Market cap. This is the total value of the company. Indexes. This is what measures the value of certain set of companies like the S&P 500, which is a group of the 500 largest companies in the US. Volatility is the way prices move in a stock. Some jump up and some jump down. Low volatility means small amounts of swings. Volume is the amount of shares that trade hands through the course of the day. Acquisition is when a company purchases another one. Annual report is an overview of companies' operations and financials. Pre-market and aftermarket is a time when the market is closed when investors can trade stocks. Annual return is how much money expressed, usually in a percent, on how much money you made in your investments in a year. Asset allocation is the action of distributing things you have, usually into your portfolio. Appreciation, when something gains in value. Cost basis, this is the average amount you paid for a stock. Example, if you bought shares at $1 and $3, your cost basis is $2. Par value or face value is what you paid for the stock or something at that time. Bond, safe investment that government or corporations issue. You are essentially lending them money and you make interest off that loan. Burn rate, the amount of money the company is losing expressed in months or years. Competitive advantage is something a company that has given them an advantage over another. Buying the dip is when you are buying when a stock goes down. Cooking the books is when a company reports or is hiding bad financials. Defensive stock. These are stocks that we need to live, like electricity or utility companies. Dollar cost averaging happens when a stock goes down and we buy more because we think it is a good price and to lower our cost basis. Demographic refers to a group of people of the same age, sex, race, country, income, employment, etc. This is a way of grouping people to make statistics. Default. This simply means that you have not been able to pay your debt. Earnings call is an audio report about past and future performance on the company every 3 months. Earnings calls can also be known as quarterly earnings, which is the written format. Fiscal year is a 1-year period a company reports its financial. It changes from company to company on when they report. Inflation is the increase in price of things and this usually happens every year. And this will decrease our buying power. For example, things like food at the grocery store or simple items go up in price every year. IPO stands for Initial Public Offering, meaning it's a company that decided to release stock to raise money. Intrinsic value. This is personally what you think the share price should be. OTC means over the counter. This is shares that aren't sold over an exchange like the NYSE or the NASDAQ, where stocks are usually exchanged. Intangible asset. This is something that has value but isn't a physical object. Like the Nike swoosh isn't a physical thing, but Nike owns it and it has value. Supply chain. This is the process that it takes to produce and distribute a commodity or product. Watch list. This is a list of stocks that you follow and want to purchase in the future. Brokerage fee. This is a fee paid out when you buy or sell through your broker, which will be a different amount every time you do it with different brokers. Dividend. This is a cash paid out to investors for simply holding on to a stock. Share buybacks. This is when a company buybacks its own shares. A correction. This is usually a 10% drop in the market, and these things can happen around every 2 years. Stock market bubble are when stocks keep becoming overvalued and essentially like inflating a bigger bubble. Timing the market. This means trying to predict if the market will go up or down in a specific time period. This can be very hard to do. Net income is an accounting number that represents if the company is making money after its expenses. TTM represents 12 months trailing, which usually refers to earnings or financial reporting. Ask and bid price. The bid price is what buyers are willing to pay for it. The ask price are what the sellers are willing to take for it. Bottom line. The bottom line refers to a company's earnings, profit, net income, or earnings per share. Top line, also known as revenue or sales before any cost is taken out. Active management. Professionals that manage a fund or mutual funds that are picking stocks for that mutual fund. ETF just stands for Exchange Traded Fund. And this is a group of stocks put into a basket and they trade like stocks on the exchange. Tailwind. This is an event that will help a stock. Basis points. 100 basis points equals 1%. 1 basis point equals 0.01%. The NASDAQ is an index that is nearly 50% technology companies and gives us an idea what that sector is doing. The Dow Jones tracks the 30 largest US companies like Nike, Microsoft, and Apple. An asset is something that a company owns that has value. Liability, something a company has but owes money on it, maybe to a creditor or supplier. Economy, the resources of a country where things are produced and consumed. Headwind, an event that could cause trouble for a company to make money. Deflation, this is the opposite of inflation, and in general, this means that prices are going to come down. Cost of capital, how much it costs a company to get money, like an interest rate that they would be getting charged to get when they take a loan. Delisting, this is when a company's ticker gets taken off the stock market exchange. FDA stands for Food and Drug Administration, which will generally be heard when you have a company that has to deal with food or drugs. Hedge or hedging, a strategy to buy something that is less risky to protect yourself from the more riskier investments you have made. Fixed interest. This is an interest rate that won't change. CEO, Chief Executive Officer, usually the head guy in the company. Private equity, investors that money has been given to a company, and this usually money comes from outside the stock market. Private sector, part of the economy that isn't under government control, like plumbers or lawyers. Pump and dump, giving false misleading information to make a stock go up in order to sell it after it's gone up. This can also be done by purchasing lots of shares that are cheap, then dumping them after the price has gone up. You're influencing this stock simply with volume. Speculation, an investment strategy that involves a lot of risk based on very little facts of success. Q1, Q2, Q3, and Q4 refers to the overall year or the company's quarterly reports. SEC, Security and Exchange Commission, is where companies have to file legal and financial information so the public can have access to it. Sector, these are the companies divided into 11 main categories, for example, healthcare and financials. Financials would be things like banks. Stock split, when the number of total shares is increased by a ratio. 2 to 1 would mean for every 1 share you own, there was now 2. Reverse stock split, this is the opposite. If it's a 2 to 1 stock split, that means for every 2 shares you own, they got cut down to 1. YTD, this simply means year to date. YOY, year over year. REIT, or also known as a REIT. This is a type of company that owns real estate and sells their company in the form of a stock. Value trap, when you think a company is on sale but someone else doesn't because of their own personal opinion. This is possibly something they think that could lose you money. Tariff, these are taxes imposed on trade between countries. Sticky, when a company sells a product or service that makes the customer come back for more. It's essentially sticking to them. Forward guidance, a prediction of what the company is expected to do over a period of time. PE ratio, this is the type of valuation metric that compares its earning power to its current price. You will usually use the PE ratio when comparing companies in the same sector. Equities, these are also known as stocks or shares that carry no fixed interest. Weighting, an allocated proportion of something, especially if it's an investment. Could be the percentage of your portfolio that is in one stock. Thank you for watching this video, and click the like and subscribe button if you enjoyed it, and I'll see you in the next one.